Welcome back. You're watching our continuing coverage here from Davos 2023. I'm Shereen Bhan, and joining me now is the head of energy at the World Economic Forum, Roberto Bocca. Thanks very much, Roberto, for joining us here. You look like you're dressed for summer.
Yeah, thank you very much. We are expecting warmer weather.
I know, and it's turned out to be completely the opposite of that.
Finally, it's winter.
Finally, it is winter. But, you know, what's the mood like as far as the energy market is concerned at this point in time, Roberto?
Well, certainly there is a lot going on the energy side with all what has happened in the last few months. I think now there is a bit more of an understanding of the situation, while a few months ago we're still very much in the middle of the crisis. And so we'll see what happens to the market. It depends from the weather, depends from the demand, how much the demand will grow or not, and how much the supply will follow. So I think it's a very interesting time, and it can swing both ways quite quickly.
Well, at this point in time, the expectation is with China reopening and reopening faster, there is going to be a demand pull, and that's going to push up prices. Most people are now talking about 110 plus. What's the expectation? How do you look at that?
Yeah, well, you know, as somebody was saying, is if I knew where the market would go, I would be a millionaire, and
You're sitting in Davos.
But I'm not one of the millionaires. So I think it's very difficult to see how fast will be and all of the repercussion of it. But certainly there is hope that the economy will start again. But of course, it's not only about China, it's about the potential slowdown of the economy at global level due to the inflation and rate rise in many economies. So I think it's not only about China, but it's more of a complex issue.
What about gas prices as well?
Well, also there you have seen depends where. In Europe they went down, but they're still pretty high compared to historical, and so it's very difficult to see where it goes. Now was a very warm winter here in Europe, now it's becoming cold. The storage are full, but of course the dynamic there depends from how cold will be the next few months. But I guess we are starting seeing in sight coming out of this crisis, the peak of the crisis at least, in a better situation than we thought we would be just 2-3 months ago. So
you believe that the worst is perhaps behind us as far as the energy crisis is concerned for now?
I do hope that the worst is behind indeed, as you suggest. But, you know, as we have seen many times, surprises can be around the corner. And I think one of the critical elements, also critical elements here for the conversation in Davos, is how organization and countries think in terms of resilience. So how we are ready to face crisis. In the past few years, we have faced so many crises. The financial, the health, of course, the energy, and we have to adapt. And so we have to build resilience in our systems to be able to cope with this.
You know, talking about energy resilience and in the context of course, the climate adaptation strategy that each country and the world will need to follow. At this point in time, given the fact that there is a global economic slowdown, fiscal space is limited, do you believe that there's likely to be a pullback, a setback on some of those spends, some of the investment that is required?
I believe actually the crisis that we have seen in the past few months will accelerate the energy transition. And I believe so because while energy transition in the head of many people or in the mind of many people was seen as a transition for sustainability, it's now very clear that it's not only for sustainability in itself so important, but it's also about energy security and energy affordability. So now both the policymaker and the business and all the stakeholders understand that we do need to make this transition. It's not just nice to have, but it's a must. And so that's why I think while there will be challenges, investment will start flowing again and fast.
What kind of financing needs do you expect that we are going to be able to see being executed on, at least in the next few years, whether it's through multilateral agencies or the private sector? What's the expectation on that front as we make this transition?
Definitely the private sector is going to play a lion role. The private sector has to invest a lot, and we are talking here both the industrial sector and the financial sector, right? There is need for investment, but more important, there is need for radical collaboration because the transition of the energy system cannot just be incremental. It has to be a step change. And so we need the collaboration that happens just at a different scale between private and public, but also within the private sector across supply chain and value chains.
What is the role that you see India playing within this?
Well, India is definitely one of the biggest countries and is increasing dramatically its renewable capacity. I believe India has put in place a number of permitting processes that allow acceleration of the transition. So creating a conducive environment for investment in India has been a great move to allow a lot of the investment that is needed to flow into India. We did some study last year with IEA saying that the investment in energy will have to be 7 times in what is today for emerging and developing markets. So you could expect a lot of people want to invest in India, and if India, as it is doing, is creating a conducive environment, that would be great for India, it would be great for the rest of the world, because what you do in India will be at scale. And so
absolutely, and that is the hope and the expectation as well. Roberto, it's been an absolute pleasure. Thanks very much for joining us here on CNBC-TV18. We appreciate your time, and we hope that you have a great Davos.
Thank you very much, Shereen. Same to you.
Well, with that, we are going to take a break here and continue our coverage on Davos 2023. We're back in a minute with more. Don't go anywhere.